Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host Shafiq Morton, and as always, it's great to be with you. The end of the financial year means that it's also the end of the tax year, and the end of the tax year means that it's time to top up your retirement savings, special incentives offered to us by the government. This is what we are going to be discussing in today's show with our special guest, Sherazaan and Harneker. Ladies and gentlemen, assalamu alaikum.
Wa alaikum salam.
Sherazaan, you're the compliance officer at Oasis, so one of the officers. So let's start off with the permissible incentives that we have in terms of topping up our retirement savings at the end of the financial year.
Yes, Shafiq. So a good place to start is to remind ourselves that we know that government sought to create a better savings culture in South Africa and to reduce the payments towards pensions. And if we look back, it goes to about 1956 when they introduced this legislation, but it was in 2016 that they started introducing this retirement reform. And if we look at it, it's just a way of creating incentives for those who want to contribute and save towards retirement. And Shafiq, it's important to know that listeners, as well as the viewers, members and investors, they need to understand what type of benefits are being offered and what these incentives are all about. So if we look at the different types of retirement funds, there's broadly 4 types of retirement funds. We have your occupational funds, which is your provident funds, your pension funds and your provident funds. And this is obviously set up if you are working with an employer-employee relationship. You also get your preservation funds, and these are types of funds that if you, for example, going to be leaving your employment for whatever reason, you have this opportunity to transfer and preserve. And then over and above those, there's also an opportunity to save towards your retirement in a retirement annuity fund. Now, all of these types of retirement funds, what National Treasury did was, with the retirement reform, it showed, this harmonization, and it introduced this harmonization of tax across all different types of retirement funds. And what this essentially means is that if you are contributing towards a retirement fund, the way that your tax is treated is harmonized across any type of retirement fund that you belong to. So if you are a member of a retirement fund, then you can deduct contributions of up to 27.5% of your taxable income or your gross salary, whichever is the higher. And this 27.5% is aggregated across all of the retirement funds. It is capped to an amount of 350,000 Rand per annum. And then if you had contributed more, if there's any excess, you also have the ability to carry this over to the next year, provided that it's obviously subject to the tax tables of that year. So now I know it sounds like a mouthful when it comes to tax calculations. It can be very daunting and overwhelming for investors or members, but I'm sure Ms. Oud will give some nice examples a bit later. But essentially for Shafiq, the most important thing is that at Oasis, we have financial advisors that can assist clients and members with these calculations, and they are fully equipped, and investors should have the comfort that these guys know what they're doing, they know how to help, they can assist with any queries in that regard.
Oh, they can do the maths.
Yes.
Masood, let's get to you now. I think the big question, to what extent are people actually making use of these incentives which are advertised every single year?
Unfortunately, Shafiq, the savings rate in South Africa are quite low. So there's a small amount of household income being directed towards some form of retirement or savings product. In addition to that, if you are a member and you are contributing towards a retirement fund, you would expect most members to take full advantage of the tax incentives that are on offer. Unfortunately, that's not always the case. If you consider the tax year in which is at the end of February each year, which is also the cutoff period of when members can contribute the maximum towards the retirement fund and claim the tax deduction in that year, it's not always the case that members take full advantage of that for the simple reason that it's often the case that people are not aware of the tax incentives of offer and they haven't sought out sound financial advice. Or it could be the case that there isn't excess funds to invest. However, my advice would always be is that if you have excess funds to invest, always as a first option, look at maximizing your contributions towards a retirement fund because you reduce your tax liability over the long term. In addition to that, effectively by not contributing towards a retirement fund, you subject yourself to an effective loss of wealth creation because there's that compounded opportunity cost of lost growth. Now, if we look at retirement annuities, for example, Sherazaan mentioned earlier that you can claim a maximum tax deduction of 27.5% of your taxable income or gross remuneration, whichever is higher. Now, if we think about that for a second, previously, government allowed you to deduct roughly around 15% of your non-retirement funding income. So what government is clearly telling taxpayers, they're encouraging taxpayers to make their own provision for retirement and not be reliant on a state pension. As we know, state pensions are already under pressure. So, and there's clear benefits of investing in an RA. We mentioned the tax deduction, which is an immediate benefit because you get it in the tax year that the contribution is made. But more importantly, Shafiq, over the long term, the growth within a retirement fund is tax-free, and you only tax once you withdraw from the fund. So it's a fantastic tax-efficient investment vehicle to build a nest egg of wealth. There are other benefits as well. There's protection of creditors. You can also nominate a beneficiary. So it's a fantastic vehicle to pass on your wealth over to the next generation.
Sherazaan, tell us something about the Top Up campaign.
Yes, it's a very exciting time of the year for us, Shafiq, where our client services teams, our IFA liaison teams, as well as our more importantly, our advisory teams, are encouraging our investors and members to top up on their retirement savings during this time. And over and above just, taking advantage of the time that is left before the end of the tax season, we are able to give comfort to our members and to the viewers that our advisors and our teams are well equipped to deal with those calculations that we were talking about. So we go through hectic training sessions, we do assessments of it to just make sure that they're able to deal with different scenarios as refreshers. And at the end of the day, it's really just to provide investors with comfort that the person that you're going to be asking to assist you with these calculations, they know what they're doing, they're equipped to do it, and they are just as excited to help you and take you along, this journey to top up on your retirement savings.
I mean, it's great to hear the word comfort. So would you,
Yes.
in essence, next to comfort, encourage people to come and to indulge in the Top Up
Yes.
campaign because they're
Yes.
going to benefit?
Yes, most definitely. Because saving towards your retirement is not just, and as we know, Shafiq, the January and February thing. So don't wait till the last minute to also do so. You should essentially be saving towards your retirement, throughout, the year. As you provide your debit orders, or if it's a lump sum to your RA. But what we try to do is, especially during this time, is remind our members to take advantage of this. Because sometimes, you've enjoyed your holiday so much, you kind of forget about the fact that the tax season or the end of the tax season is coming up, which is the 29th of February. But like we said, don't wait till the last minute, because obviously, if you have any queries or there's certain things that you want to consider before doing so, and you need assistance, it does take time. So I would always say, judge yourself to about the 20th of February. Make sure that you've done whatever you need to have done with your contributions, so that by that time we are able to review and process those types of amounts before the end of the tax season.
Now, Masood, how do we calculate the amount of permissible savings or tax incentives that we can enjoy? What's the process?
Sure, Shafiq. Let's look at a practical example. Let's say a client is 35 years of age and their gross remuneration is around 750,000 Rand per year. Now, as we mentioned earlier, the maximum tax deduction that client can receive is 27.5% of 750,000, which is 206,250. Now, the tax saving that the client would receive effectively is 84,563 Rand, which is 41% of the deduction based on the current tax tables. Now, let's assume further that that client goes on and retires at the age of 60. So if we do the math, that's another 25 years of tax saving, which is roughly 2.1 million Rand, which SARS is giving you back as a taxpayer by contributing towards your retirement fund. So Shafiq, saving for retirement makes perfect sense because you reduce your tax liability over the long term. My advice would be for anyone earning an income, you should be saving for retirement. And once you start saving for retirement, it's important that you maximize your contributions towards your retirement fund in order to reduce your tax liability. Remember, Shafiq, saving for retirement is not only for the wealthy. And it shouldn't be something that you may consider sometime in the future, because the earlier you start saving for retirement, the better off you will be over the long term.
Sherazaan, we've already spoken about the benefits of contributing, of topping up, but tell us something about The RA you mentioned, the retirement annuity, how does this flow into all the benefits that we can get?
Yeah, there are great benefits in and features that is designed around a retirement annuity fund. So like we had mentioned earlier, you're not only getting the benefit with regards to that 27.5% deduction, and we spoke about that 350,000 Rand cap, and over above that, whatever is excess in that year, you can carry it over to the next year. The nice thing, Shafiq, about an RA is also that you are able to secure your retirement savings and for up until when you retire, which is at the age of 55. And whatever investment returns is derived within your contributions with a retirement annuity fund, it is tax-free. So you basically have a product and an opportunity to save within a type of retirement fund that can also protect your savings against, for example, in the eventuality of anything happening where you pass away. So over and above that, one of the nice features of the product is that it falls outside of your estate. So it's not subject to estate duty. And in this way, savings in this product protects you against creditors.
Oh, that's certainly a good point you've made, the fact that no estate tax, no death tax or anything, that it just carries straight on. So it's a win-win situation.
Yes, it's an excellent way of saving for your retirement, securing your nest egg, and ensuring that ultimately when you do retire, you have the sustainability to be able to sufficiently draw down at a good standard of living.
Masood, it's time for the maths again.
Yes.
Can you give us sort of some graphic examples of in terms of numbers, how we can benefit from everything that we're talking about?
Sure, Shafiq. If we look at an example of a client that decided to top up their retirement annuity or invest in a retirement fund versus a client that did not. So let's take an example of a client that's earning a taxable income of 240,000 Rand for the year. Let's assume this client never topped up their retirement annuity. Based on the current tax tables and taking into account a primary rebate of 14,220, the effective tax liability for that client would be 32,512 Rand. Now let's assume that same client decided to top up their retirement fund and contributed 66,000 Rand towards a retirement fund during that particular tax year. Now remember, you can claim that as a tax deduction, which means that that contribution of 66,000 Rand reduces your taxable income from 240,000 to 174,000, which now means that the effective tax liability for that client, taking into account the current tax tables and the primary rebate of 14,220, the tax liability is now reduced to 17,100. So clearly you can see by contributing 66,000 to an RA, the client effectively reduced their tax from 32,512 Rand to 17,100, effectively saving 15,412 Rand in tax. So just to conclude on this point, Shafiq, retirement funds are fantastic tax-efficient investment vehicles to build a nest egg of wealth that you can use during retirement after you've stopped working and maintain your standard of living. So the key message from this, Shafiq, is that if you are a member of a retirement fund, speak to your financial advisor before the end of February, which is the tax year, and top up your retirement fund because it would be in your best interest to do so.
And of course, I'm sure you would advise people, don't come on the 28th of February, specifically if it's not a leap year, come early in the month so that you can pay full attention to what the clients need.
Exactly, Shafiq. And in fact, this year, the 29th of February is on a Saturday. So try and get your top-ups in, as Sherazaan mentioned, way before that and not lose out on the contribution that you can claim as a deduction.
Thank you very much, ladies and gentlemen, for talking to us about topping up our retirement funds.
Sure. Thank you, Shafiq.
And that concludes today's edition of the Oasis Focus on Finance show, during which we discussed the issue of topping up your retirement savings. And don't forget, you must do it before the end of February. Our special guests were Sherazaan and Masood Harneker. Should you wish to watch this or any of our other shows, you can log into the Oasis Crescent YouTube channel, or you can find us on LinkedIn. Should you wish to call us, 0860 100 786, or email info@oasiscrescent.com. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.